Oil prices have always been one of the most powerful forces shaping the global economy. But in 2025, their influence on the stock market is even more complex and more unpredictable than ever before. Because oil isn't just a commodity anymore. It's a mirror reflecting global demand, inflation, geopolitics, and even investor psychology. When oil prices rise or fall sharply, it doesn't just affect gas stations, it sends shockwaves through the entire financial system. So today, let's break down how oil prices are impacting the stock market in 2025, what investors should watch, and how smart investors are positioning themselves in this new energy era. Let's get started. Oil has always been called the lifeblood of the global economy. From transportation to manufacturing, from agriculture to technology, almost every industry depends on energy. So when the price of oil moves, everything else follows. In 2025, the story of oil prices is one of volatility and transition. The world is shifting rapidly toward renewable energy, electric vehicles, and green technologies. But at the same time, global demand for oil is still rising, especially in developing economies. Add in the geopolitical tensions, production cuts by OPEC+, and changing global trade routes, and you've got a recipe for major market swings. Now, let's understand the relationship between oil and the stock market. When oil prices go up, it usually signals strong demand, meaning the economy is growing. That's good for corporate profits, and stocks often rise. But if oil prices rise too fast, it leads to higher costs for transportation, manufacturing, and logistics. This increases inflation, and when inflation rises, central banks step in with higher interest rates. Higher interest rates hurt growth stocks, reduce borrowing, and slow down the economy. So oil can be both a sign of growth and a trigger for slowdown. It's a delicate balance. In 2025, this balance is more fragile than ever. Because the world is facing what experts call a dual energy transition, trying to meet short-term energy demand while shifting toward long-term sustainability. Countries are investing billions in green energy, yet they still rely on oil for daily operations. This mismatch is creating unpredictable price swings that investors must learn to navigate. Now, let's talk about how oil prices are shaping different sectors of the stock market in 2025. When oil prices rise, energy companies, especially oil producers, refineries, and service providers, see massive profits. Stocks like ExxonMobil, Chevron, and Shell tend to surge because their revenue grows directly with oil prices. But other sectors like airlines, logistics, and manufacturing suffer because fuel costs eat into profits. For example, airline companies are heavily dependent on jet fuel. When oil hits $100 a barrel, ticket prices rise, margins shrink, and stock prices fall. Meanwhile, companies involved in renewable energy, solar, wind, and battery technology often rally because high oil prices make clean energy alternatives more attractive. So in 2025, oil price movements are creating a tug-of-war between traditional energy stocks and green energy stocks. Investors are constantly shifting between the two, depending on which direction oil is moving. And this back-and-forth movement is adding a new layer of volatility to global markets. But here's the interesting part. In 2025, oil prices don't move only because of supply and demand. They're increasingly driven by politics, algorithms, and global uncertainty. For instance, tensions in the Middle East, sanctions on major oil-producing nations, and OPEC+ production decisions can cause prices to jump overnight. Even a rumor about reduced output can send futures markets soaring. Add to that the influence of hedge funds and automated trading systems, and oil prices can now change dramatically within minutes without any major fundamental shift. This high-speed volatility creates short-term trading opportunities but also long-term risk for traditional investors. Because when oil prices swing wildly, inflation expectations swing with them. And inflation expectations directly affect bond yields, central bank decisions, and you guessed it, stock market performance. Now, here is something many people overlook. The correlation between oil prices and the stock market isn't constant. Sometimes they move together. Sometimes they move in opposite directions. For example, when oil prices rise during strong economic growth, both energy and broader markets go up. But when prices rise because of geopolitical tension or supply disruption, stocks often fall because investors fear economic slowdown. So the key question isn't just, are oil prices going up or down? It's, why are they going up or down? The reason behind the move determines how the market will react. In 2025, one major driver of oil prices is China's recovery and industrial rebound. As the world's largest oil importer, China's energy demand plays a critical role in setting global prices. If Chinese factories are booming, oil prices climb and so do global stock markets. If demand slows, both decline. At the same time, the United States has become one of the world's top oil producers thanks to shale production. This gives the U.S. economy some insulation from high oil prices, because what hurts consumers at the pump helps domestic energy companies' profits. So within the U.S. stock market, there's a fascinating balance. When consumer sectors fall, energy sectors often rise, keeping overall market volatility in check. Now, what does all this mean for investors in 2025? It means oil has become a key indicator for predicting market trends. Smart investors are watching oil not just as a commodity, but as a signal. When oil prices rise steadily with strong economic data, it is a sign of global growth. But if oil prices rise while growth slows, it's a warning, a potential setup for stagflation or recession. So, if you're investing in 2025, here's how to think strategically. First, diversify across sectors. Don't put all your money into tech or all into energy. When oil rises, tech may fall, but energy will likely rise, balancing your portfolio. Second, watch inflation closely. Oil prices have a direct effect on consumer prices. If oil crosses $100 per barrel again, inflation could resurface, pushing central banks to raise rates, which can hurt high-growth sectors. On the other hand, if oil stays stable around $70 to $80, it supports steady growth without overheating the economy. Third, embrace renewable energy as a hedge. The future of energy is changing fast. Investing in clean energy, ETFs, EV infrastructure, or battery technology can balance the risk of traditional oil exposure. When oil prices rise, renewables get more attention and those stocks often outperform. Fourth, keep an eye on geopolitical headlines. In 2025, markets move not just on earnings reports, but on tweets, policies, and international conflicts. A single statement from OPEC or a sudden shift in global alliances can trigger major price moves. Staying informed gives you an edge. And finally, stay long-term focused. Oil will always be cyclical. It will rise, fall, and rise again. But over time, the world is clearly moving toward cleaner, smarter, and more diversified energy systems. That transition will create both volatility and opportunity for those patient enough to ride it. So yes, the impact of oil prices on the stock market in 2025 is massive, but not one-dimensional. Rising oil can mean growth or inflation. Falling oil can mean stability or slowdown. It all depends on the context. The key is not to fear volatility, but to understand it. Because in every oil shock, there are winners and losers. And investors who learn to read the energy signals early can position themselves ahead of the crowd. So as you watch the headlines this year, the OPEC decisions, the global demand forecasts, the inflation reports, remember this. Oil doesn't just fuel cars and factories. It fuels the markets. And understanding its movements could be the difference between reacting to the market and predicting it. If you found this breakdown helpful, make sure to like the video, subscribe for more financial insights, and share it with someone who wants to understand how global events truly shape the stock market. Because in the world of investing, knowledge is power. And in 2025, that power begins with understanding the price of oil.